Welcome to weekly view on markets. Iran-US war impacted markets in this week, and we have seen a kind of fall in the markets and also fear in the markets. Markets corrected by 2 to 3% in 1 week, as there was complete breakdown of US-Iran peace deal. Rising oil prices and rupee depreciation against dollars added to the misery of the markets. Fear of crude scarcity due to the disruption in the shipping lines, blockage of Hormuz, Red Sea, and Black Sea by various groups affiliated to Iran has caused the disruption in the shipping lines. These are the red flags for the market in the coming week. Nifty has lost more than 2%, that is 2.33%. It has closed at 23,767. Bank Nifty has lost the most. It has lost 3.12% for the full week and closed at 56,693. Mid cap index lost 1.29%, closed at 61,622. Small cap index also lost 2.18% and it has closed at 18,875. The fear index, that is India VIX, has gone up by 6.69%. So that shows a kind of panic has set in the markets after breakdown of US Iran peace deal. There were more number of sectors losing during this week, and few sectors like FMCG, auto, media, public sector companies, defense companies managed to end in the green with very small gain, less than 1%. Private bank lost more than 4%. Realty sector lost more than 4%. NBFCs, oil and gas all lost 2 to 3%. Information technology, infrastructure, energy sector, consumer durables companies, commodities all lost between 1 to 2%. Manufacturing lost about 0.5%. So there were more number of stocks declining than the stocks advancing. So you can say there was a kind of bloodbath in the market. Now let us look at technical charts. This is the chart of Nifty index. This line which is at the bottom, this is the support line, and Nifty has got good support at around 23,500 levels, and Nifty has got resistance shown by this line which is on the top, that is around 24,500, and Nifty has been trading in this range, and the range is becoming smaller and smaller. And if we see this week, despite a lot of bad news, Nifty has managed to trade in a small range. And if it breaks out about this range, that is, if Nifty goes about 24,500, we'll see a good rally. In case if it breaks down due to some geopolitical news or unexpected events, then Nifty has next good support at around 23,200 and followed by the support at 22,250. These are the level to watch if Nifty declines. And decline from here will be a good buying opportunity for the long term investors. This is the chart of Nifty mid cap index. I have taken a longer view you can see the chart is for a longer duration, and this is the line at the bottom which represents the support line, and the line at the top is the resistance line. Nifty mid cap index has resistance at around 63,000 level, that is the all time high level, and it has got good support at around 55,000 levels. If I extend this line, it will be touching at around 55,000 levels. So if Nifty mid cap index drops to 55,000 level, that will be a good buying opportunity. This is the chart of Nifty small cap index. Small cap index also is trading in a range. The range is 19,200 on the higher side, and it is at around 15,000 on the lower side. And we can see after giving a good rally from at around 15,000 levels, now it has started consolidating. If there is no any adverse news, the Nifty small cap index is likely to go to the higher levels in the coming weeks. In case it drops to at around 15,000 level, that will be excellent buying opportunity. This is a chart of Bank Nifty index. Bank Nifty index has got good support at around 54,000 level shown by the support line, and it has got resistance at around 58,000 levels. Whenever it is coming to these levels, it is taking a small correction, and if it crosses this, then we'll see Bank Nifty index crossing 60,000 levels. It has got resistance at around 61,600 levels. Now let us look at some of the macroeconomic parameters. RBI foreign exchange reserves is at 676.32 billion US dollars for this week. It has gone up by 1.08 billion US dollars during this week. The RBI reserve level is quite good, and it can take care of some of the economic shocks. Foreign exchange rate is at 96.56 rupees per dollar. Rupee has depreciated sharply during this week from around 95.5 level to 96.56 due to the breakout of war in West Asia again. Dollar index is at 101.73. It has slightly moved up from around 100 level to 101.73. Gold price is study at 1,44,930 for 10 grams, 24 carat. Brent crude price has gone up sharply, and it is at $96.78 per barrel. The higher crude price is a bad news for Indian economy and also for the markets. 10-year benchmark yield is at 6.81. Yields have slightly gone up. If we look at FII, DII data, FIIs have been selling except on Tuesday. They have sold on all days, and they have sold 7,182 crores during this week. Domestic institutional investors have been buying except on 2 days, that is on Tuesday and Wednesday, they sold small quantities. But overall for the week, DIIs have bought 8,637 crores. DII buying is compensating for FII selling. Otherwise, we should have seen a bigger correction in the markets. The outlook for coming weeks is highly volatile. It is very difficult to predict with respect to US-Iran war. It has got a big impact on our markets. So US-Iran war is escalating and ship movement in Hormuz Channel, Red Sea is adversely affected. West Asia has become volatile again. Oil prices have gone up from around $70 per barrel to 100 level during this week, and at the weekend slightly corrected. It is at around $96.5 per barrel. Indian rupee has also depreciated sharply during this week, and these are all going to have impact on the markets in the coming week. Quarterly results season is going on. Many more results are expected in the coming week. Specific action on certain stock is expected based on the results. Mutual fund investors should ignore short-term volatility and they should continue their SIPs. They will get better returns in the long term. Stock investors should look for opportunities. Indian macroeconomic parameters are quite stable. So any dip in the market due to some geopolitical unexpected events is a good buying opportunity for long-term investors. This is all for this week. If you like my video, please subscribe to my channel. You can refer to your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.